welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, October 18th. Now, last week was the strongest S&P 500 performance in 3 months, with the broad market gaining about 1.8% week over week. Last Thursday's rally was the largest since March of this year. The S&P 500 is now only 1.5% off all-time highs. Over the past 2 weeks, U.S. equity markets have experienced a strong rally. Over the same time frame, the VIX index has declined from the mid-20s to the mid-teens. The VIX index is measuring 17 as I sit here, and that 15-16 area has been the low end for the VIX in the pandemic markets. Now, if we look at 30-day S&P 500 realized vol, it's measuring 14%. The SPX options that expire in 30 calendar days are trading on an implied volatility of 12.5%. So, in other words, 1 month realized vols are above 1 month implieds, which is fairly unusual. Index option volume, including SPX and VIX options, continue to run very strong. Last week, earnings season kicked off, and this week we'll see even more companies reporting. Now, last week was primarily the big banks, and this week we'll see a lot more tech and consumer names that have a more volatile history on earnings. This week we'll also have the October VIX futures and options expire. The spread between the expiring October contract and November is out to 285 ahead of Wednesday's expiration. The spread between November and December is already $1.45. The back of the VIX curve flattens out around the 25 level. So we've got a market back within shouting distance of old highs. We've got a VIX index near the low end of its 18-month range. We've got a lot of quarterly reports on deck and October VIX futures and options expiring Wednesday. That's it for Vol 411. Thank you very much for tuning in.